Well, good afternoon. Hope everybody's healthy. You have your pencil and paper ready because you're going to get a lot of information today. Of course, our presenters, who are Troy Iverson and Brian Davis from AvantGuard Monitoring Center out there in Utah. They've had a moving target today trying to figure out this topic of current state of the financial and capital market and stability in the security industry. Well, there's not much stability, and finances are pretty uncertain for most of us, if not all of us. So they've got an interesting topic to address today. So as you all know, AvantGuard's a major nationwide central station. These guys are the people that make it work, and they're going to inform us at this time. So I want to turn it over first to Troy, who's going to make some introduction, and then he'll be turning it over, I think, to Brian for the, I guess Troy, is Brian the brains of the operation? Is that it?
Brian is the brains, yes.
Troy's the face and Brian's the brains. Okay, so here we go.
Well, thanks, Ken. I appreciate it. Thanks for the opportunity, and hello, everyone. And let me just quickly tell you a little bit about AvantGuard. Some of you may know us, some of you may not know who we are. We have roots back to 1977. We have two fully redundant central stations, one in Utah, that's our corporate offices. We have another one in Idaho, fully redundant. We monitor in all 50 states, in Canada and Mexico, the Caribbean, in Australia. We're strictly a wholesale monitoring company. We don't have an installation company or sales company. We don't compete against you as dealers. We monitor pretty much everything out there, your residential, your commercial, security, fire, your PERS, your video accounts, your phone apps, your crash detections, a lot of IoT devices. We offer a unique, we call it a hybrid or cloud solution to many of you dealers out there that have run or currently run your own central station that are having issues with staffing or technology. You could use our technology. We could do nights and weekends for you, our holidays. So we have a lot of different approaches on the hybrid side. So if you're interested in that, that's a great tool for you, especially during this time with this COVID-19 going around and staffing. We have some great solutions for you. Originally, this webinar was planned to be at ISC West in Las Vegas last month, and it was going to be a roundtable discussion in our meeting room that we always have. And but this, thanks Ken to making this a webinar. So we still want you to ask questions, and it'll be just a little bit different format. So just type your questions in, and Ken and Eileen will get those questions out to us. But I want to turn the time to Brian Davis, who is our CFO. Brian talks to most of the large banks, the brokers, large dealers in this industry, and is, like Ken said, really a moving target, this topic. But we'll speak to what we have learned so far, and again, we look forward to your questions. So Brian, from that, we'll let you kind of take it from there.
Yeah, thanks. Can you hear me okay?
Yep.
Great. So yeah, moving target is probably the understatement of the of the quarter, or as we move into the second quarter. You know, when we first started talking about doing this at ISC West, I had just come back from the Barnes conference, which many of you may have been there, where they discussed, and I'm going to talk a little bit about what I heard at the Barnes conference. But as all of you know, things have dramatically changed just in the 2 months since I was down in Florida and listening to kind of the industry updates. So just a little bit about myself. So I'm the Chief Financial Officer of Beckler. Beckler is the holding company for both AvantGuard and our sister company Frias. So it's basically one organization from a accounting and finance standpoint. The two companies really operate independently from an operations standpoint. I joined Beckler back in 2017, so I've been here just over 2 years. I was brand new to the industry, so I've been, drinking from a fire hose for the past 2 years, trying to learn the industry. And I'm sure many of you out there are much more experienced and know more about the industry than I do at this point. But it's been a really fun transition. I was in healthcare for 20 years. I'm not sure I would want to be in that right now. So that's got to be totally insane. But anyway, just a little bit about our companies. So AvantGuard, I think most of you are familiar with AvantGuard. It's a premier wholesale central station. We are now right about 750,000 subscribers that we monitor out of our 2 facilities, one in Ogden, Utah, and one up in Rexburg, Idaho, and they're both fully redundant. And any questions in regards to AvantGuard and operations, I'm sure Troy would be happy to take those questions as well. Frias is our sister company to AvantGuard. It's a mobile PERS manufacturer. Beckler was formed back in 2017 and brought these 2 companies under one roof. And it was purchased, it's purchased in 2000, so it was purchased in 2015. At the time, it had about 35,000 subscribers. We're now over 400,000 subscribers and selling devices. We have 6 different products, 2 different IoT platforms that these devices work off of. That's just a little bit about the companies, and I know that's not what I'm here to talk about is kind of the capital markets and some other trends that we're seeing in the industry and even outside the industry, because obviously things happening outside the industry are impacting all of us right now. So some of the topics I wanted to talk about today. In February, like I was saying, I attended the conference down in Florida, and I have a few takeaways from there, particularly around the capital markets. It was a big topic of discussion back then, and it would be interesting if they did the same discussion today, what they would say and what they're seeing. And then talk a little bit about what we're currently seeing. And then I think most of us are interested or have been looking at or possibly even have submitted applications under the federal stimulus programs. And we'll talk a little bit about that. And I'm really interested to hear kind of what's happening out there. I'm going to talk about my own experience going through the PPP, the Payroll Protection Program Act, and the SBA loans. But I'm really interested to hear what you guys, and hopefully we'll get a lot of questions. Again, this was intended to be a roundtable. Doing it via webinar made that a little bit more difficult, but we're going to certainly want to take your questions and your comments and share those with the group. So in between each of these topics, we'll give you an opportunity to do that. I've been doing a lot of online and calls and webinars about what's going on. I'm sure you have too, and I'm sure you guys have a lot of information that you can share with us as well. So back in February, the big news of the industry was there was the announcement that 2 of the really big players in the industry were pulling out. Bank of America, Capital Source, particularly, they called them out in the meeting, and there was really no secret that those were the 2 big ones that were pulling out of the industry at that time. They said that private equity was being cautious at the time, because I think part of it because there was this whole banking disruption going on. They were seeing market values declining. Capital shortage was a high threat, and they made the comment that this was potentially a big deal. And that was before COVID-19 hit. And they were already a little bit of the sky is falling, I think. I didn't take it as the sky was falling. I felt like the bigger players were, and in fact, we AvantGuard banks with one of those 2 big big players, and so we were impacted directly with these individuals pulling out of the market. But we felt that there were others in the market that were willing to still play and take on these loans. So we came out of February. I think I was talking to a lot of people down there, and there was a little bit of gloom, like things were not looking great for the industry. But I talked to others who said, well, I think it's probably overblown. It's not as big a deal. Obviously, there's certain individuals that it was a huge deal to, and others that it had less impact. But overall, I think it was probably a bit of a gloom and doom scenario. But and again, that was before COVID-19 was even introduced. And then, so when I was asked to do this, a couple months ago, I was like, oh, well, I'm going to talk about, what happened, and did their predictions come true, in regards to the capital markets and what's happening, and then, the current market, it seems now, is COVID-19. It's like that's all we hear about. I just pulled this last night. In the United States, there's over 330,000 infections right now, and you can see, back in February, when the conference was, I think there might have been one case in the United States at that point. And so things have obviously dramatically changed over the past 2 months. And now we're 330,000 climbing. And so this obviously had an impact on all of the economy. I sat on a webinar a few days ago, and these numbers probably have changed since then as well. But some of the things that so this was a bank out of Missouri. Everybody's trying to do their own forecasting, and so it's even when I was listening to this, so they're predicting 2020 GDP, Q1 being about 0.8%, Q2 a minus 15.5, minus 0.3 in the third quarter, and actually coming out of it in the fourth quarter. And even when they were going through this, and I was listening to this, there was a lot of qualifying statements as they were looking at this, because no one really seems to know exactly what's going to happen. There's a lot of assumptions went into their model. That the virus would have similar reproduction rate as China, that the quarantine effort would be similar impact. And I think this is a big one, that consumer confidence will return once the virus is contained. What's going to happen when we do all go back to work and all the businesses open back up? How long is it going to take for it to actually recover? And so I think this is, I've seen a couple of them. I don't think anybody really knows. The experts don't even know kind of what's going to happen, because there's, really no one's really at this point said, that there's even a real end in sight, or at least a definitive end in sight. We're seeing unemployment claims are even 5 times higher than they were during the last recession, or the last recession, and that's a little bit disconcerting. But again, this is different than I think what we saw back in 2008. This is actually a good thing. So the Fed's, the Fed rate is basically at 0. And I was talking to a banker yesterday, and he was saying this is actually a good thing, because what's happening is it's allowing them, they basically have unlimited resources, where back in 2008 and 2009, they did not. And the banks were, the liquidity of the banks was a huge issue. What the Feds have done by lowering the rate to almost 0 is that it basically, at this point anyway, they're saying unlimited resources to ensure that the banks stay open. So, that was a big problem back in 2008 and 9, is they were so worried about the banks shutting down, because, they couldn't get funds, or, And so this is actually a good thing. It supports corporate refinancing. And again, this is more of a, maybe not an industry specific, but kind of overall, it is a good thing. And it's actually working to keep the banks open right now.
Brian, let me interrupt, because we have a captive audience here that are all about the industry, alarm industry. That's what they want to hear about.
Yeah.
The perennial question, whether we're in a coronavirus crisis or things working normally, is what's my company worth? How much can I sell it for? That is the question that every one of these guys listening wants to know. So first,
Yeah,
I think the first issue is, well, first of all, in the midst of this crisis, I don't see any deals coming down. That's for starters. And you might want to comment on that, although I don't know that there's much to comment on with that.
Yeah.
Actually, you might be a good source for that. So you're a central station. You have hundreds of dealers. You would know if they're transferring accounts, because you'd have to be told they were transferring accounts. So my guess is you haven't been seeing much of that.
Yeah, and Troy could probably speak to this as well.
Yeah.
I don't think we have not seen a huge migration of accounts being bought and transferred. I don't know, Troy, maybe you can.
Yeah, you're right. You're right on, Ken and Brian. There hasn't been a lot going on. They continue to grow. There are a few dealers out there that have great financial stability and have some good funding that are buying a lot of accounts. So dealers that are struggling and looking to sell, they've reached out to us, and they have 100 to 1,000 accounts, and I can't keep in business. And some of our larger dealers are saying, "Great, send them over. We'll buy them." So there is a little bit, but for the most part, you're right on. It's everyone's kind of staying status quo.
So, Jim Worcester's on, and he does some financing for, I'm going to call it the smaller companies, because I don't think ADT's called them yet, to finance them. Maybe Jim, I'm going to unmute you for a second and see if you want to contribute to current state of affairs for the industry and what the market rate is right now for selling, or if you're willing to refinance or finance a company so that they don't have to sell their accounts. You're unmuted. I don't know whether you can. You there?
Yeah, hold on. I'm trying to unmute, Ken.
No, you're good. We hear you.
Okay, good. Well, we're of course right in the middle of it, and we're dealing with several companies, and they're medium sized, that have loans. And so we haven't seen any significant change yet. We're very sensitive, obviously, and we're taking continual communications with our existing loan people, and also critically the central stations. That the exact question you mentioned, migration, what's going on? And of course, what we want to do is be as proactive as we can. And so not wait until we get, the receivables are 90 days. We want to go as we audit our dealers' performance. And of course, we use, we have our own receivables to contend with too. And we haven't seen anything significant. But Jim Jr., who is really the hands-on guy, has noticed that there's a significant variation within geographic areas. And I spoke, as an example, South Florida, on the East Coast, not so much. On the West Coast, Naples, a lot. As one dealer said, the phone stopped ringing. So those are our experiences at this point. Has that answered your question, Ken?
Well, yeah, that question, but I have another one for you. If Brian and Troy don't mind me taking from their time a little bit. But Jim, so a company comes to you and they say, listen, we're not looking to buy any accounts, but we'd like to borrow some money from you. So first of all, do you do that?
Yes, we do. And we,
all right,
yes.
Wait a minute. So if you do you have a number in mind that you start with when someone comes, I want to borrow some account. So I know your first question is going to be, okay, what's your RMR? I know your second question is going to be, let me see your contract.
Ken, that's our first question.
Okay,
and
if it's not, and if
no kidding.
and if it's not my contract, I know it's going to be a reduced price. But where are you, and have you dropped your price in the last 2 months?
Well, the answer to that is pretty simple. The opportunities are not presenting themselves at this point. We just kind of, we're in a pause mode. And I don't know whether Junior's on here. He can give it the, Jim, are you on?
I don't know if he's on. I didn't.
Guess not.
All right. So that's what I wanted to know from you. I got to go back to these guys. You know, they're paying the big bucks for the webinar, so I got to go. So Brian, let me go back to you, or maybe Troy, because here's a question that deals with the Financial Times. Are you seeing a difference in increase of accounts you're monitoring, or is it leveled? Is it decreasing? What are you seeing on your end?
Go ahead, Troy. You can take this if you want.
Yeah, no. So we still are seeing an increase company-wide, depending on the dealer, what they're doing and how they're selling it. But the security specific guys with 500 to 3,000-ish range, we're not seeing a ton of growth right now. I think they're more worried about their staffing, how to keep their technicians busy, letting them, you know, how do they get into homes? People are not letting them into homes anymore. They're scared, right? And so there's a real focus on that size of a dealer where they're staying status quo. They continue to pay us, which is great. We'll continue to keep a close eye on that as a monitoring center on their monthly invoices, make sure they're squared away there. But what we're seeing currently is there's not a whole lot of growth on that size of a dealer.
Well, let's get to that other topic now. I'm going to guess that you have not yet had dealers telling you that they can't pay you, won't pay you, need an extension. Those are 3 different items there. I'm guessing that you haven't seen that yet. I wonder if, I'm sure you've been thinking about it though.
Yeah.
Brian?
So yeah. So yeah, for the most part, we're in pretty good shape right now. And in fact, actually at the end of the year, we had some dealers that were asking us for, you know, extended terms because they were going through refinancing. And with the 2 big banks pulling out, there were several of those that were going through refinancing. The good thing is that in January, most of those got the refinancing through, which was really good sign. They all got caught up. We are in good shape. And we've seen, you know, in the early part of the year, some of these refinancing loans closing. I think my concern now is that we're kind of at the end of the money chain, if you will, right? Because the consumers are paying the dealers are paying us. You know, I don't think we've had enough time to see if the consumers are going to start slow paying. You know, if they start slow paying, then the dealers start running into cash issues, and then it becomes, you know, so I think from our perspective, I think it's too early in the game to be able to judge whether what kind of impact. I think it will have an impact you know, over the next couple of months, but you know, how much of an impact, or, you know, I think that's a huge question I'm not sure anybody can answer right now, but we're concerned.
I'm going to ask you a much harder question, and one that will make this webinar more than worthwhile for every dealer on it and every central station on it, because you've got both kind of attendees here. And it's this: we know that every company here attending or listening who has less than 500 employees is going to be applying for the Paycheck Protection Program. Many, some on this webinar, have hired my firm to guide them in the PPP program. and Brian, AvantGuard didn't. Brian's been doing it on his own, which is why I'm going to put him on the spot right now. So, and wait, I'm going to get there, Brian, with the question. So you get ready. So those of you that have not applied for the PPP program, you have to do it. I don't care if you're a one-man operation, go apply for it. If you have less than 500 employees, apply for it. If you need, if you want our help, K&K's help, we are charging for it. And I think it's going to be worth it. I hope it's going to be worth your while engaging us. Where we think that where we're going to earn our money is on the back end, because as hard or as frustrating as it's been getting funding under the PPP program, we think that on the way out, it might be even more frustrating and difficult to figure out and get away with, because the goal of the PPP program is 100% forgiveness of the loan. So you want to keep your eye on that. There's also the EDIL grant for $10,000. Each of you can be doing that. But here comes the question, Brian, and here comes what all of you need to know, whether you're dealer or central station. The PPP program is going to give you a loan. 75% of that loan must be used for payroll. I believe you're going to be able to pay subcontractors with it if they're independent contractors at 1099. At first, my question was, can we consider the central station a independent contractor of the dealer? I'm going to answer that, and I'll see if Brian disagrees with me. I've come to the conclusion, Brian, that a dealer cannot use PPP funds to pay the central station as its independent contractor, meaning subcontractor. You need time to think about it, or do you?
It would be great if the answer was yes, they could.
But the answer is they can't.
I don't think so. At least my interpretation at this point. Now, you know,
Right. Okay. So we're in agreement. Wait, I got a better question for you, because this is the one where I was really going. You can use 25% of the loan money to pay rent and utility charges. So the question is, will the central station charge constitute a utility charge? Are we going to be able to confuse whoever's looking at it enough to say, hey, this is all telecommunication, just like the telephone bill, just like an internet charge. So why can't we use the funds to pay the central station? So what do you think about that, Brian? You think you can use those part? Don't forget, 25% that you have left has to, it's allocated really for rent and also group health insurance. So you may or may not have anything left after you pay that out of the 25%. But if you do, is a legitimate charge that you can go ahead and use it for your central station. So wait a second. I've got Jeff Cohn. The quick answer to your utility charge is no way. That's a big stretch. Okay, Jeff. You know what? Why should I just put Brian on the spot? Jeff, you're unmuted.
Hi, Ken. This is Jeff with Quick Response Monitoring. I think, you know, calling central station charge is a utility would be saying an equivalent to saying that coffee is utility to your employees. By providing coffee to your employees, that's a utility to help them keep functioning. We're a vendor. We're a service provider, but I don't think that you could say that. I just don't think you could say that we are a utility. We are not regulated like the utilities. It's never been considered a utility, although we are a key function of your business.
Okay, I don't disagree with that. Okay, so and Jeff, I'm muting you again because we have to go back to these guys. So thank you though. Let me say this to you. If you can't use the PPP money to pay the central station, the truth of the matter is, so what? You should be using your other money. The PPP money that you're taking in, hopefully this week or next, if they ever process the loans, is not going to be your only source of funds. You're all supposed to be collecting money from your subscribers, customers. You know that you're supposed to pay part of that money over to the central station. They're doing the work for you. I'm not going to go so far as to tell you that it's trust fund money, because it's probably not, but you might want to treat it that way. It belongs, part of it belongs to the central station. So that would be the answer for that. Okay, Brian, back to you.
Well, I think, you know, I agree. I think that that's probably a stretch.
Here's a
You know,
question
I think
that someone's answered. Here, before you guys start asking a bunch of PPP questions, okay, this one is, can we lay off in April and then rehire in May when the PPP money hits? I'm going to answer this one. Brian, you want to answer that, or do you want me to answer it?
Go ahead, you can answer that.
Okay. You might disagree with me, which is fine. But this is the only PPP question I'm going to answer. You got to hire my firm to answer the rest of them. Maybe Brian wants to give away the information. When you apply for the loan, the PPP loan, you are, first of all, giving them your 2019 average monthly payroll. That's how the calculation's made for how much you're going to be getting on the loan, part of it anyway. You're also indicating how many employees you have. The original form asked how many jobs you had, and a lot of people got confused by that. They thought it was, you know, how many jobs they were working on. So no, they changed it. It's employee. How many employees do you have? So you had to have been open in February for a period of time. Right now, you literally could have no employees, none. Could have laid off everybody. They're all on unemployment. But when you get the money, the PPP funds, you have to hire your staff. You have to then have employees. And my understanding at the moment, Brian, you can let me know if you think this is right. My recommendation is going to be you hire back 100% of your employees. But I think that you don't get penalized when it comes time to forgiveness, as long as you've hired back at least 75% of your listed employees. And you don't have to hire them back until you get the funding, and you then have to keep them employed through June 30th. I can tell you that we're going to be recommending to all of our clients in the PPP program, go back as close as you can to full employment as you reported in your PPP application, and you're going to have to keep that consistent through June 30th. You do not have to employ the exact same people. You can replace the people. Okay, so that's my take. Brian, I'm sorry taking up your time. You can go back. You can take over, I mean.
Yeah, I think there's a lot of confusion still on that topic. You know, I've read things and I've heard, you know, that you know, the whole purpose of the PPP loan is to retain or to keep people employed. I mean, that is the intent of the loan. That's why it's so heavily focused on, you know, 75% of it has to be spent on payroll. You know, I've been told by some lenders that, you know, you have to show actually by person, you know, here's who was employed prior to getting the loan, here's who was employed after getting the loan. Now the guidance is changing every day, and I think there's new guidance coming out, I heard tomorrow, that clarify some of these questions. But But I mean, my personal experience has been going through this PPP program. The first thing was trying to find a bank that would actually accept applications, and that's been a real challenge.
Yeah, you have to go to your own bank. I think that's pretty clear. I don't think banks are going to entertain these applications, not right now anyway. Right now, they are definitely prioritizing their own customers.
Yeah, in fact, a lot of the banks, if you don't have an account already established with them, you can't apply. Now there are banks out there that are accepting non current customers, I guess, or you're not a current customer. But I have yet to heard of anyone actually getting funded. According to the federal government, there have been. I think that some of the bigger banks may actually be funding these on their own, waiting for the government, because they can afford to do this, and then they're going to get the money back from the federal government. I wonder if they're actually going all the way through to the SBA and getting actual loans from, they're getting the money from the SBA. I think these smaller banks and regional banks, they can't afford to do that. They're not going to take that risk, which is why we're seeing such chaos right now with the PPP. I actually submitted my information yesterday, but it was all, hardly anybody's taking it online. You have to somehow get in the back door, which is probably through your best bet is going through your current lender. Because like Ken was saying, it seems like they're taking care of their own customers, which I get. I get that, and it makes sense. But I think it's going to be hit and miss, at least for a while, and it'll be interesting to see what happens. Kind of going back to, we talked about a lot of this stuff. Can you see my screen? Is my screen up?
Yeah.
It is.
Yeah,
okay.
it is.
Yeah. So, some of the words on the street, this is what I'm hearing, and I've been making a lot of phone calls over the last week, talking to banks, talking to some of our own customers, talking to other consultants, people in the industry, attorneys. The capital markets, before all of this, they were seeing CIBC, Capital One, the other lenders were absolutely, making deals. But now we're hearing, and we basically said that everything's on hold. Refinancing has stalled. I don't think that the banks that are pulling out are probably, we're seeing them being more flexible in basically, extending or and even in some cases, delaying payments on their loans.
Why do you suppose the perception is, if not the reality, that lenders that were traditionally interested in funding the alarm industry are cooling or pulling out altogether? Are they souring on the RMR model, and what is it? Is it that we weren't really dealing with traditional banks that were looking to make loans, as opposed to venture capitalists who were throwing their money into the industry because of the RMR market? I think that's more the case, quite honestly. But what do you think?
Yeah, and I mean, in fact, when I'm out looking, like I said, we were with one of the banks that said they want out of the industry. Now, we had just signed a multi-year deal with them, and they're willing to hold that and see it through. But we're kind of on a short leash, if you will. If we try to do anything out of the ordinary than just our normal operations, they're not going to step up to do that. They just don't want to be in the industry anymore. So I think to answer your question, I mean, I think that there was a couple of big defaults in the industry. I think a couple of the big banks that were burned in that just got cold feet. But what I'm seeing going out and looking now is that the whole RMR lending is definitely being looked at. I came from outside the industry, and so when I came into the industry, and I was like, I was trying to wrap my head around this RMR lending. I was always borrowing on traditional EBITDA lending, cash flow lending, and the banks are definitely, from what I'm seeing and what I'm hearing, they're much more, they're looking more at cash flow than they are at RMR. And that's where I think it's.
Wait. RMR is cash flow, isn't it?
Well, I think it's more net cash flow, positive cash flow, not, and because cash flow to me is looking at not just what's coming in, but what's going out, right? So EBITDA, basically looking at EBITDA lending or net cash flow lending, as opposed to just looking at the top line, they're looking at the bottom line of cash. So I think if you have strong EBITDA, you have strong positive cash flow, I don't think you're going to have a problem finding someone to refinance you once we're out of this mess. I mean, right now everything's on hold because banks are they're afraid to take on, and I'm sure it's probably outside the industry. They're just afraid to take on new debt because of all the uncertainty.
Well, I see that your frame of reference is the central station, but most alarm dealers wind up with their experience in borrowing usually involves the acquisition of accounts.
Right.
They're not, I don't, Jim said that he does it, but I don't think a lot of, I've encouraged it, but I don't know that a lot of alarm companies actually say, okay, I'm sitting with $10,000 worth of RMR. I could use some money for operations. I'm not going to use it for acquisition. So I'm going to go to Jim Worcester and I'm going to borrow. I want to borrow some money. So they go to him and they go, hey, I want to borrow whatever, $100,000. How much of my RMR do I got to put up as collateral in order to get that kind of money? Okay, I'm sure that goes on, but I think most of the people are, I want to buy accounts. I got a guy who wants to sell them to me. I need to borrow $250,000 or $500,000 or $1 million, whatever it is, 100,000, whatever the number is. And now they go to a lender. Now, if they go to a traditional bank, they're going to be looked at like they're from Mars, because most banks don't understand this kind of lending. Okay. So, and unless they can find out who the big guys use for borrowing, the chances are they're not going to meet them. So they go to a guy like, and I don't know, because Jim Worcester, I think, has a unique product and service. They go to him, and he's going to say, he says to himself, okay, you got. He values the RMR like anybody else does. Of course, as a lender, he's going to give a substantially lower number than a buyer or seller would be coming up with. So if the market is at 35 times RMR, I don't know. I don't want to put words in Jerry's mouth, but in Jim's mouth, but maybe he only loans out at 25 times or 20 times RMR, and that's how he, it makes his collateral have the value that he's going to need in case there's a default. But what the guys online, the guys in attendance here are really interested in is, what should they be paying for accounts if they want to buy them? What should they be selling accounts if they want to sell them? What banks can they go to, and how much will the banks loan them in order to make this acquisition happen? See, when a central station goes to refinance, unless it's in connection with buying another central station or buying more accounts from a central station, wholesale monitoring accounts from a central station, it's not like what the dealers are doing. It's a central station that's just operating a big business. and getting financing like a lot of businesses do in a lot of in every industry, not a lot of industries, every industry. So that's the way I see it. But I'm not a finance guy, so better hearing it from
I agree. I mean, they're not going to go away. I don't think in the industry they can't go away from RMR lending. But I think that they're looking at leverage. They want lower leverage points, and I think they from a covenant standpoint, we may see tightening of the covenants around EBITDA, things like that. So I mean, I don't think they can go away. And you're right. I mean, central stations are in a different boat than the traditional dealers out there for sure. I mean,
well, unless they're buying accounts, which
right,
happens.
unless we're buying accounts. But I don't really have a good feel. I think probably Jim, like you said, probably has a much better feel for what the value is and what things are going for out there. We have not purchased any accounts or sold any accounts, so
I'm going to make Jim do his own webinar instead of Jim. You contact me. We'll put on a webinar for you next week. Okay, maybe you want to move up your slides because we're starting to run out of time.
Yeah, well, let's see what else I had here.
Comments.
So one thing I had was talking about the Stimulus Act and Stimulus CARES Act. I am curious, for comments about anybody. Has anybody gotten funded? Have they actually gotten money?
I'm going to answer that for everybody and say no. But
yeah,
if anyone has that's on here, let us know, please.
I mean,
I don't think we should wait too long for a response because I don't think we're going to get one.
Probably not going to get anything, right? But obviously the PPP, the Paycheck Protection Program is definitely getting the most attention right now because it's, you can borrow up to $10 million. I was doing the math. I was trying to figure out how you would even get to 10 million. It doesn't even seem possible.
Oh, we have clients. We have clients that are getting. I know one of our clients is getting over 6. By the way, we happen to represent the healthcare industry as well, and
really?
that client happens to be a healthcare client. Yeah.
Yeah, I think it's going to be interesting on the PPP with the forgiveness, and are you ultimately going to have to prove that you were economically damaged by what went on? Right now it's saying, do you have basically, do you feel like you could be, the uncertainty of the economy, that's why you're applying for the loan. I mean, I probably every single small business in the country has uncertainty and can answer that question, yes.
Unless you own a grocery store or a toilet paper dispensary.
Yeah, maybe, yeah. But yeah, so I think it's going to be interesting to see the forgiveness standpoint because, it almost in some regards seems too good to be true that they're just going to forgive this stuff. And it's going to be interesting. I do think you're going to need help to go through the process and to ensure that you do get forgiven as much as possible. And I think it probably
and Brian, they only have 2 choices: pay Kirschenbaum and Kirschenbaum to help them, or call you and you work for free, but you're not going to take their call. So they're really down to one option.
I've spent enough time on my own companies trying to get this thing through, and I don't want to. I did not do this completely on my own. Trust me. I mean, I've talked to our attorneys and banks and others that have helped me through the process.
By the way, there's going to be a second post-funding issue, so I want to alert everybody to it. Again, I don't want to spend much time on this PPP because that's a whole different discussion, I think. But I want to let you know this. So first, there's 3 phases to this PPP. 1, get funded. Okay, everybody's got their app in already, or they should, or they will, and that's done. Waiting for the money. Okay, great. 2, get forgiveness. Okay, we hope that my firm is going to be helping you with that, and if you don't need the help, great. And the goal is 100% forgiveness. we've heard a lot of people saying, you know what, I may actually just want to borrow the money for 2 years at 1%, and so I won't be so unhappy if I do just get stuck with a loan. That's fine. That's what they want to do, but that's not what we're encouraging. I never encourage taking on debt. So I would prefer to go with the 100% forgiveness. But the third phase is what I want to warn you about. After you get forgiveness, after the dust settles, after the economy is back on track, that's when the government's going to hire fraud investigators to go out, and they're going to be working on contingency, getting a third or whatever percentage of whatever they can recover back from people that participated in this program, took these loans, and maybe shouldn't have gotten them in the first place or misused the funds somehow. Okay? There's going to be people that do that, some intentionally, many unintentionally and uninformed, and there's going to be a whole cottage industry created for the lawyers, investigators, and auditors to pursue that. And that comes a year, 2 years after things have all settled out. So you need to be aware of that too. Okay, that's another issue you need to know about.
Yeah, and frankly, that's what worries me the most about it is that, you know, it's pretty easy to get this loan and you know, a year from now, 2 years from now, when they start looking at it and saying, well, why did you get this? You know, you didn't end up, you didn't look like you were so economically hurt during this time. And, you know, just because it's so confusing right now. I mean, there's going to be so much unintentional, you know, problems with getting the loan.
I think it would be pretty fair to say, and let's not worry about every industry, because really we're interested in the alarm industry here. There's going to be some loss of income during this period of time. And when I say period of time, I'm talking about, I guess when this stay at home started, which was, let's put it, what are we in now? We're in April, so it started in March. It's probably going to go at least through April, maybe into May, before we're up and running. So we're going to have a good 2 months out of business, essentially. I think either Troy or you, Brian, mentioned that even alarm companies, they are essential. Maybe they're allowed to work in most places because they're essential, but nobody's letting them work anyway. People don't want them in their home. People don't want them on the job. Other trades are not being allowed to work. The construction industry, New York anyway, shut down. I mean, okay, you're in a different part of the country. I don't know what's going on over there, but there's going to be loss of income for sure. So do you have to show that you are completely broke at the end of this whole situation to justify forgiveness? I don't think that that's the plan. I think the government has just decided, you know what, we want everybody employed, and so we're going to pay them. If the employers are willing to keep them on, we're going to reimburse the employers for doing it. This is the aid to small businesses. Now, whatever benefit a small business gets because they're having their payroll taken care of, their rent taken care of, so the rest of the money coming in hopefully is going to pay their bills, the other bills that they have, because not everything is accounted for out of the PPP program. So you're going to have to pay your central station. You're going to have to pay your suppliers, a few of the other suppliers. So I don't know that you're going to have to show that you didn't have any money at all left. That's not going to be what you have to show. Okay. Now, what's going to happen to the company that actually made more money during these several months? I can't answer that. I can't, but I don't think that applies, will apply to the alarm industry. It's possible they'll take in more money because of the lag in I mean, AvantGuard might take in more money over the next 2 months because maybe it was owed money from its dealers and they just decided to pay during this period. So the cash flow may be positive during these periods instead of negative in a way. But and dealers have the same issues with their customers. Their customers are waiting for paychecks so that they can pay the dealers. Whether they'll deem their alarm system a priority in their budget is another question. Because my glass is always half empty instead of half full, I can tell you that my bankruptcy department, we're gearing up. We expect that there's going to be a lot of financial difficulty going forward, especially in July and August, when the government's no longer paying to the employees. It may take some time for things to get back to normal, if they ever do. Who know? I mean, I'm not a doctor. I don't know about when this virus is going to be lifted. When is a central station going to feel comfortable bringing their operators back into the building instead of working remote? You guys have your operators working remote, a lot of them, right?
We do, yes.
Yeah. So when is the central station going to say, you know, we're going to bring them all back to work in their cubicles? They're going to run the risk that one person is going to get it and spread it to the rest of their operators. So are we ever going to get back to that? I don't know, because we're sure as hell not going to have a vaccine available for a long time, meaning months, years. That a long time to a small business owner who's trying to operate month to month, week to week, maybe day to day, right? So that's how I see it. But no question that the government's loan programs now, sure, they're going to keep us going for the next 2 months for sure, and hopefully that'll be enough. That's the plan, and they're saying they'll extend it if they have to. So hopefully, Brian, I don't understand this concept of all of a sudden the government's got unlimited amounts of money available to it. I don't get that. But I mean, maybe you do. I don't know.
They just print it, right?
Well, yeah, but I thought we had to have some standard.
You know, let me add my recommendation as a central station to you dealers is to have communication with your central station, and don't just not stop, or just don't stop paying, right? And just communicate with us, let us know where you're at, and have that, again, that relationship that's so important with central stations, one of your biggest partners, and we need to be those partners with you. So if you do run into financial issues, talk to your central station quickly and let them know, and let's work it out together.
Brian, you have a slide with your contact information so that they can reach Troy? I know you don't want them, you want them to call Troy, I know.
Hey, it's Brian on there. That's perfect.
That's my email.
Where's the phone number, man? Oh, you want them to call you? Don't you be giving away any PPP advice. Send them to me.
I'm
We'll
not
send them all to you.
going down that road of giving advice. I don't know. I'll end up in trouble if I do that.
Troy, we had at least one alarm guy wants to reach out to you. So where the heck's your phone number, man?
Well, you can email me.
go.
I'll call back.
Huh?
Or just go to sales@agmonitoring.com. So we have the Beckler level, then the monitoring level. If it's for monitoring purposes, just go to agmonitoring.com, and that's our website, and email just sales@agmonitoring.com, and any of our sales reps, I'll look for it. Any of our reps will reach out for sure and help out.
Oh, here's a good one for you, Brian. Because I don't even know what this means. Will hyperinflation be part of the fallout? I have no idea what that means.
I don't know. I guess they are predicting that, you know, inflation could significantly increase, but
What would that mean? You're a finance guy, Brian.
I don't know. That's probably beyond my expertise.
Oh, okay. Yeah, I don't know what that means. Hyperinflation. Would hyperinflation mean that alarm companies would be upping the price of their services, central stations upping the price of their services, Is that what it means? You know, I've lived through one so-called inflationary period. I remember it was the end of the 70s and into the 80s, and I was busy building my practice at that time, and I had a house I bought in '79, and I knew we were in inflation. They called it the inflationary time. All I know is that my house was going up $100,000 a year in value. So to me, inflation, I can't wait for it to start because I need my current house to start moving up in value. So he answered his own question. This was Don Fate, who's in Westchester. When you need a wheelbarrow of cash to buy a roll of toilet paper, Don, you may need that right now. So I don't know. We might be in inflation right now.
I don't even think you can find it, can you? So
Yeah, no, you can't because I'm hoarding it all. I'm going to be opening up a dispensary soon. Bart has said that weakening dollar is what it means. Depends on what's happening around the world. Well, right. Well, we don't really care. Okay, so right now we don't care what the value is as opposed to other countries, unless we're talking about import. Well, I guess is the question that we're now asking: are we going to be paying more for cameras that are coming out of China? Is that what inflation is going to mean to this industry? Maybe. By the way, does anyone know whether the cameras have started flowing? Is the product more readily available now? Troy, would you know that?
You know, I heard that a lot of the, manufacturing plants are reopening in China. So that's all I know. So I'm sure they're back on working on but we're definitely not a manufacturer, but that's just what we've heard, that they're back opening.
When you were first giving your introduction at the beginning, I thought, and so I want you to clear this up. I thought that AvantGuard, although I know you're a wholesale monitoring center, but don't you have some specialty in the PERS area, monitoring the PERS?
Yeah. So probably half of our business is PERS related, and we have a sister company called Freus that they manufacture a PERS device and sell that PERS device, and that's again a sister company. But yeah, so it's a big part of our business is the PERS.
Now, although this webinar certainly isn't on this topic, I want to just mention, I'm starting to redefine PERS into two different categories. They're used interchangeably, but PERS used to mean medical alert, I think. I would think that the word PERS is now broader than simply medical alert, because with the advent of GPS,
Sure.
it now has turned also into a panic button type situation. So would you agree with that? And does AvantGuard monitor it that way?
Yeah, we can for sure. And so as we look at it, probably 85% of all of our current PERS sales going out, or dealers adding accounts, are GPS. They're mobile PERS units. So an M-PERS, which is the mobile PERS, it also has a button. It could be a panic button or anything like that for sure. Yeah.
Okay. The medical alert monitoring does not require a license I'm not sure in any state. Strictly medical alert, I don't believe requires a license in any state. But once you add the feature of a panic button, where the central station is going to verify an emergency situation and then dispatch police to whatever location they have, whether it's GPS or in the house, then you're providing traditional security monitoring, and you're going to need a license in at least 20 states that require the license for monitoring. So that's just an aside. What does AvantGuard do in terms of video monitoring? Are you set up for that? Are you doing it?
Yeah, we do video monitoring. Yeah.
Well, what type of video monitoring? Do you do just video clips? Do you do live video? Do you
live video? We do talk down. We do commercial, residential, external, internal. Yeah, so we do video monitoring. The different systems that we have, a lot of different camera systems. We use couple different platforms into our system. So yeah.
The question is, here's a question from somebody. Are you seeing an uptick in PERS lately?
We are, yeah.
Yeah, we are.
Yeah, for sure. Really, here's the reason. At least one of our reasonings that we think is that family members aren't seeing their parents. They're worried about their parents. They could FaceTime. Some don't have FaceTime ability. Some of these elderly that aren't technology, they're not advanced technology-wise. They need help, so they are purchasing these PERS units to give comfort to their parents and to them as siblings or grandkids, and give them a PERS unit for sure. So we have seen an increase in PERS.
It doesn't require a technician to go to the house. Most of these are online sales or direct sales over the phone, and so they're not really impacted by they get a device in the mail, and then they set it up when it gets to their house.
Right, but the alarm companies, just so you know, that are contracting for that monitoring require a monitoring license there, as does the central station if they're monitoring panic.
Yeah.
That's now secure.
Obviously use it as panic,
but they're selling it as a PERS, Ken, so they're selling it as a medical. It could be additional to a panic button, but they're still selling it as a medical button. So realistically, it's very gray area right now as far as the licensing is concerned for that aspect.
Well, I'm going to ungray it for you. If it's a panic button, in my humble opinion, you're now monitoring a security system.
Yeah, well.
Well, you don't pay me for advice, so you don't have to.
Exactly right. We'll agree to disagree, I think, on that one.
Okay. That's fair. I think that I've had central stations and we're almost done, folks. I've had central stations contact me that told me that they were strictly monitoring video, and that they had a whole room full of operators who actually watched the video. It wasn't even clips, and it wasn't activating, on motion or something like that. They were actually watching this thing all the time, and I don't know whether that was old. It's actually, I'm thinking about it, it's been a couple of years since I think I've heard from someone like that. And maybe now the technology has changed, so they've added motion to these cameras, and you don't have to stare at a screen all day long. You can wait for it to pop up because they see some activity. But are there those central stations that specialize in that? Now, most of these guys don't need that. They don't have 24-hour monitoring. That's right. That's not one of the typical services for these cameras.
Yeah, we do not do that. Ours are clip driven or live video. It's a motion, and then we go into live, right? We see the pre 8 to 10 seconds, and then the post, we could go in live for a few minutes afterwards. But there are a couple companies out there that's all they do is video monitoring. They have big screens, and it's a hefty fee to watch someone watch that for 24 hours a day, for sure. But with technology coming, for sure they're using at least how I see it. We don't do that, but I don't think that is as popular as it was years ago, with now technology being the fact that we just use motion or lasers or whatever, right, to send those clips in, and we could view it live once that's tripped.
So we have another question from one of the alarm dealers, and I'm going to ask it because I think it focuses on our disagreement on licensing. I want to see how you answer it.
Okay.
Define panic versus medical alert.
Yeah, I guess that's an answer for you. So that's where the gray area is, in my opinion, right, Ken? So you buy a PERS device that has one button, and it's we will come over and exactly right. What's a panic versus a med versus whatever? And I think that's where that gray area is. So, and you're answering the phone right now. So, but yeah.
They got a call. Listen, I got to make a living, you know?
Yeah, no, I hear you for sure.
Okay, so panic versus med. There's a difference. Okay, what's the difference?
Yeah, is with the one button, is there a difference, Ken? I mean, it's for licensing purposes.
Is there one button does Freus send its device out with one button or two buttons?
Yes.
No, they all
one
have
button. Most of these mobile PERS devices have one button only.
One button. Okay, got it. Now, and it's two-way audio on these devices, right?
That's correct.
Oh, okay. So there's always two-way audio on these
Yes.
devices. Okay. Now, if you get a medical alert, who are you going to call?
Paramedics.
EMT, right? If you get a panic, who are you going to call?
Well, depends on this. Yeah, it's well, here it is. Let me answer this too. It depends on the jurisdiction, right? And so a lot of jurisdictions.
You would not stand up too well if I had you on the stand, Troy. I'm telling you right now, you're getting ready to rip you apart on the stand. So answer the question, Judge. Tell him to answer the question. You get a panic. Someone's in my house. Someone's following me. Someone's doing this and that. Who are you going to call? And don't tell me it depends on the jurisdiction.
I call the dispatch number, Ken, and whether it's a police or a lot of the times it's one number and it goes to police, fire, and ambulance, and they dispatch it accordingly.
Oh, so 911.
Well, it's a direct number. It's not, we don't call 911. It's a direct number that we go through, but
that's central station. So you have a special number. You don't have to go through 911.
Right, correct.
Right. But you're definitely going to be identifying that call differently.
For sure.
Knowing that the dispatch is going to be different.
We will let dispatch know what we heard. Yes.
Right. Okay. So well, that by the way is why I think that the license is probably needed. But okay. So I want to thank Troy and Brian for spending time with us. I want to thank everyone who's attended. By the way, we're going to plan another webinar. I'm going to plan it now. If any dealer wants to participate, I'm looking for 3 dealers who will go on a discussion group to discuss what they're doing during this crisis, how it's changed their operations around a little bit. Victor Harding suggested it. He's going to participate from Canada, and I'd like 3 guys from the States to do it. And I see some of them were on before. I don't know if they're still on, but if you'd like to participate, please get in touch with me today, and we'll see if we can put it together, maybe this week or early next week. You guys want to say anything before we go?
Thanks, Ken. Appreciate it. It's a lot of moving parts as we discussed. There's some positives out there. Don't get discouraged. Keep working. Have that relationship with your central station, which is so important. And hey, if you're looking for a new central station, call us. AvantGuard Monitoring. We'll take care of you.
Yeah, they're a great operation. I appreciate them. I hear from the dealers. I know which central stations give a lot of problems and which central stations are more cooperative and helpful with the dealers. And AvantGuard is definitely someone that you can work with. So feel free to contact them and make sure you get my rider to their contract. And
there you go.
I'll force them to agree to it. So
beautiful. All right. Very good.
All right, guys, we're going to close this webinar, and I want to thank everybody for participating and being involved.
Stay healthy, everybody.
Yeah, you too. Brian, take care. Good luck with your PPP.
Thank you.
Right. See ya.